All right. Good morning. Good morning. Good morning. Welcome back to the live trading room. How's everyone doing today? Let me know if you can hear, voice, see screen. If everything is working correctly, then we can get rolling. Good, 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 good. Perfect, perfect, perfect. So, welcome back. If you guys are brand new, live trading room. What we do here is we discuss the different trading opportunities that are on my radar for the day ahead. We often get distracted talking about different things, robot apocalypse, trading systems, trader assessments, breakdowns, all that fun stuff. We kind of go wherever the live room takes us, and it's a fun environment where you can hopefully come and feel secure and confident in asking questions. That's going to help push you along the path of becoming a consistently profitable trader. And what we do here is I live stream the first trade that we look at, trading opportunity that we look at, called the trade of the day, even if it's not my best trading opportunity today, but something that is um, educational. That way, people on YouTube and TradingView can kind of experience a small piece of what we do here. Today, we are going to head back to the Euro Aussie, because we have an interesting situation here. We're coming off a very nice cipher win 2 weeks ago on the Euro Aussie. Good point right here, right? When it comes to advanced patterns, and we talked about this when we initially analyzed the trade, is you got to realize that when you're looking for an advanced pattern, or really any type of situation that you would class a counter trend move, are you expecting a big full reversal in the trend? Or are you looking for a small bit of relief? Which one? You are looking for a small bit of relief. In most cases, obviously the overall analysis will dictate that. But in most cases, whenever you hear counter trend, whether it's a structure-based trend, whether it's a loss of momentum-based trend, whether it's a advanced pattern formation, you're looking for small areas of relief. And I say that because I run into this all the time, where I think I did post this publicly as well. You see stuff like that, and then you get traders saying, "Ah, man, it stunk because it lost," and blah 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 blah. And then you're like, "Well, how did it lose? Like, it won. It did the move we expected it to make, and then it continued doing what it was doing." And you get a lot of traders, and again, this is one of the biggest failures that I see in traders out there, is that they don't necessarily have a problem identifying trading opportunity, but they're not too great with entries, or with exits, excuse me, whether it's stop losses or targets. So, shooting too small, shooting too big, that type of stuff. So it's very important that when you're trading stuff, right, you don't just trade it because you saw it in a book or you saw it on YouTube, right? You actually know what you're trading. You actually have an idea of what it's supposed to produce, and that way you can be as efficient as possible with it. So, nice winner on the cipher. Congrats again. I know a few of you guys took it. Now, as you can see, we have broken down to the downside, right? We have broken below a previous level of structure support. We do not technically have a lower low, lower close yet with our current daily candle, but we can probably anticipate that we're going to have one. And we're going to see moves like this across the market on a lot of the Australian and New Zealand pairs, because there was some news that came out today. So, like many other places, height hiking, rate hiking. There we go. Rate hiking cycles are starting to come, and the RBA is the latest. Now, they had a rate statement this morning, or well, right around midnight my time this morning for many of you guys, which basically was more hawkish than expected. Now, do you guys know what hawkish and dovish means? When I first started trading, because again, I have no formal education in trading, I was like, birds? Birds? What do birds have to do? I started Google searching birds and hawks, and I'm like, well, America, eagle. So I wait till they say eagle, and whatever. But yeah, hawkish is more aggressive. Dovish is more conservative. So if you ever hear anything about like a hawkish or a dovish statement is more like a conservative statement, like, yeah, we were going to do this, but I think we need to wait until we get a little bit more confirmation from the data, and then maybe we'll blah, 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 right? A hawkish statement is more aggressive, where it's like, hey, yeah, we were going to do that. Now we're going to do this. Let's get after it. And that's what happened with the RBA this morning, where I believe initially their plans were to increase rates or start their rate hiking cycle in August. They were a little bit more hawkish this morning and said, hey, we might do June. And there's even thoughts that, hey, it might come in May. So you're seeing a massive move in the Aussie pairs this morning because of that surprise, quote unquote, surprise news event. And people are starting to position themselves before the rate hike. See, that's how it works, right? The rate hike comes in, people position themselves in anticipation of the news. So you're seeing that across the board. By the way, while we're talking about news, let me just bring over my Forex Factory for you guys. You can see we do have a rather busy week. Again, we had that this morning. Got ISM coming out today for the dollar. Tomorrow, we have an FOMC statement, I believe, if I'm right. Yep, FOMC minutes. Sorry, not statement. FOMC minutes tomorrow. And then I think on Thursday, we have some important FOMC people speaking. So again, we are also here in the US in a rate hiking cycle, right? So this is important as well, and seeing if we're going to stick to that 50 during the next chance or if anything's going to change. So a pretty significant week fundamentally. But to the technicals, which is what we focus on here in the live room, let's anticipate a lower low, lower close, right? A break and close below our previous level structure. Again, hasn't happened yet, but when you're looking at the daily chart, you got to sort of anticipate these things for the rest of your analysis to get in front of things. Identifying a lower low, lower close, that is the I in our 4-step process, IPDE. If you're new, identify, predict, decide, execute. Once we identify that lower low, lower close, we can then predict what direction is price most likely to travel in. It's a really simple process once you get it down. So simple, you'd think it wouldn't work, right? Yep. Identify, use your eyes. What do you see? Now you got to know what you're looking at and what's important and what's not important. Most of what happens in the market isn't important, but pretty simple, right? We can predict that price is likely to continue lower, right? So I always like thinking of this prediction process as a 3-part prediction process, right? We want to predict which direction is price likely to go. If it goes in that direction, where is it likely to go to? And then the last one, how is it likely to get there? So the next part of the question is, if price is going to go lower, where do you think we're likely to go to next? And you may need to zoom out to a weekly chart. I scrunched it up with the daily because I'm pretty familiar with this pair just because we've been looking at it for the last couple of weeks. But you may need to go to weekly. But let's start looking at where price can go next, right? And you can see what I'll do is this. I'll take this horizontal line. I'll get to your question in a little bit, David. And I'll just drag it to the low of price. That's going to tell me where price is trading at right now. You can see, assuming we break and close below this level of structure, there's room to the downside. So the next question is, if we continue to the downside, where are we likely to go to next? And you can see there's a whole bunch of ebbs and flows around this, right? We got price going here, up and down and up and down and up and down. David says 136.38 is where he would be looking for. 136.38. I'll mark that on. Yes, right. I'm supposed to ask, where do you guys think we're going to go? Shoot me some numbers. So David's looking at the very lows right here. Feel free to shoot in your numbers as well. Let me just ask, go back to David's first question. If it makes a lower wick, but it closes above the previous candle low, it acts as a liquidity grab rather than a continuation of structure. Correction. Yeah, correct. Yeah, not correction. Correct. Yeah. So the close below is the most important part. I mean, we have a lot of day ahead of us. But yeah, the close below is essentially kind of going off our theme of what we talked about yesterday in the Q&A session where we talked about building indicators and indicators used in the markets. The lower low, lower close is our confirmation, right? Because who knows? It can always end up like this. And if you get something like that, after this candle, there's no way I'm anticipating a move higher, because it just means that price pushed up to that certain level and then boom, it was beat down. I look at that as more of a bearish move, right? So yes, 100% correct, David. Orson says hard to see, but around 142s. Yeah, it's hard to see, right? So essentially, there's a lot of junk in this level. So a few things you can do, right? We can bring out our volume profile. We can see if there's any specific levels in here that stand out more than others. What stands out to me is really this right here. And again, I always look at structure first, right? I look at our previous moves here and how price has wiggled and jiggled and how we did something very repetitive down here, right? You guys see what we did down there? We kept hitting a previous level of structure. So that's going to be an important level. Now our volume profile is going to line up with that as well. You can see we get a little bit of a gap. We start increasing right around this level. So right around these lows, support, 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 broken, resistance, 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 right around this level, about 140, 150s is the first sign of danger, which I would anticipate. So an aggressive level would be the lows here that David pointed out. Right around 142s, like you said, Orsi, or 141 50s, anywhere in this area is going to be a more conservative level. So again, what we're doing, and it's hard to see. That's why you got to kind of stay, hopefully if you're trading a pair that you're used to, you kind of know it because you look at it all the time. But that kind of gives us an idea of where we can go. So we identified the potential lower low, lower close. We predicted that if that happens, we can continue lower. We've done our analysis. We've seen that, hey, if we can continue lower, where are we likely to continue lower to? There's something else we can add to that as well, as far as predicting the level on where we can go lower to. Yep, we can use fib extensions. We got multiple areas we can choose from. We can get this bigger swing high to swing low. It looks like a 127. And we'll just do the same analysis from both. Fibonacci extension, swing high to swing low, and back up 127 right at that level, giving us some confirmation. We'll put in an AB equals CD pattern. Now we know it's going to give us a lower move, but again, we have two predictions here. We have a conservative and an aggressive one. So you can see first one, Fibonacci extension 127 at the higher level, 1618 hovering a little bit lower than the lower level. If we drag on an AB equals CD pattern, we got an AB equals CD pattern right at David's level, almost dead on that previous structure low, looking left. Chris on YouTube says 1420 is an area of a 1414 extension as well. Yep. So if you're someone that uses a 1414, you can check that out. Now let's do the same thing for a lower level. And I guess this is where Chris's 1414 is going to come in. If we check out this lower swing right here, this kind of the second move of the double top here, you're going to get something similar. You're going to get a 1618 right beneath this 127. Again, you have a 1414 a little bit higher. Up to you. I personally don't value the 1414. So the 127 and the 1618 are ones that I look for as far as fibs. But whatever fibs you value, those are certainly relevant when you put them on. And then we can do kind of the same thing here again, even though this isn't an extension. So this is going to be the main move, the bigger move that we draw out. We can still kind of measure a potential harmonic move from this level. And you're going to get that AB equals CD pattern right at that level. So I think overall we did a good job. And again, this all comes back to structure, right? We talked about CTS trading over the last few weeks and organizing and whatnot. And I always say that structure is the backbone of my trading, and maybe that doesn't make sense to many people. But if we kind of just rewind real quick and we take a look at how I performed this analysis, what was the first thing that I looked at when I was trying to decide on if there was room to go lower or where we were likely to go lower to? It was structure, right? I looked left on the chart. I found levels of structure, analyzed levels of structure, and drew up my lines. Then when it came to AB equals CD, when it came to Fibonacci's, when it came to the volume profile, right? That's all secondary. So it's again, and that doesn't have to be that way for you, right? You can be indicator first, you can be fundamental. It doesn't matter how you trade, but just when you think about organizing your trading plan, I think there needs to be a centerpiece. There needs to be a main philosophy. And for me, it is structure, right? Support, resistance, structure. So that always starts things off. That always gives me the initial kind of, if you imagine like a painting, that gives me the perimeter, the rough colors in the background. Then we add the details later with our tools to kind of pinpoint, hey, where exactly in that level is the best place to shoot for. So I think it's kind of cool to see that. So yeah, cool. Two good predictions by you guys, right? You guys did it before me. The last part of our prediction process, right? One is what direction we like it to go in. Two is if we go in that direction, where we like it to go to. The third part is if we're going to go lower, how are we likely to get there? I always say there's three ways. There's really two ways. This part really doesn't matter. I don't know. I like working in threes. Rule of threes are cool. We can go straight there, right? Just boom, keep dropping down and go straight there. We can, I guess, consolidate sideways like a low and tight flag or descending triangle, something like that, and go there. Hey, welcome, Phil. Talking about the Aussie, look at that. Or we can pull back. Now, again, that part doesn't really matter much for your trading because you can't control it. So you're kind of doing whatever the market does anyway. But at least mentally it prepares you. So when you're looking at it, you're not asking that question. Because a lot of new traders do ask this question. Okay, well, how are we going to do there? At least you can prepare. So you can tell yourself, okay, well, if we go straight down, I'm just SOL, stuff out of luck, right? I can't do anything. If we consolidate sideways, you flip to your trading plan. What are my rules for attacking low and tight flags? What are my rules for attacking tight consolidation patterns? All right, if we get low and tight flag, if we get descending triangle, then I can do this. And the other way, if we pull back, okay, what is my plan for attacking pullbacks? And then you can start preparing for different situations. If you're like me, or like many of our traders, many successful traders as well, you can start visualizing, you can start marking up your charts, you can start rehearsing it, going through your if-then thought process. If we come back to structure, then I look for this, then I look for that. And that way, when it actually happens, if it actually happens, you're prepared for it, right? Don't underestimate visualization. I was teaching this lesson yesterday. And again, the best example I can always give is think about your favorite sport. Think about golfers. Think about field goal kickers in football. Think about people taking free kicks. Think about NBA players on the free throw line. Think about baseball players in the batter's box, right? What do they all do? I don't know much about hockey. I'm sure they have something. They all go through a routine. Why do they go through that routine? Because that's what they've practiced every single time when they're working on the skill. So by going through that routine, they're rehearsing and training their body to say, hey, this is that thing that we've done a million times at practice. We're going to do it again. And it puts them in that comfort level. So there is nothing wrong. I know some people are nervous about having dirty charts. Nothing wrong with drawing a picture here and being okay, well, if we do that, all right, then RSI. Okay, then I need that to happen. Then I need this to happen. All right, and then once that happens, then I'm going to put a target or a stop right there. I'm going to put target down at this level and right, rehearse it. It will make you more comfortable. And if that live trading opportunity actually happens, you won't go into kind of like shock. Shadow battling, says Phil. Yeah. You won't go into shock. Because believe me, that shock happens where you wait for a trade and it happens. You're like, you freeze up. It's happened to the best of us. So, yep. Now we wait. I would expect some type of relief in the market if we just go down to the 4 hour. Real quick, every time you get an aggressive move, I would expect relief, right? So some form of either consolidation or a pullback. Obviously, we got a previous level of structure right here. This is a very nice starting point for you to look for a pullback to. I love this move right here. This is a low and tight breakout. And we wait for the trading opportunity and we keep tracking it until we get there. Real quick, just to follow up, and if YouTube and Instagram, you guys are Instagram, TradingView, if you have any questions, let me know before I boot you out for a little bit. But if we follow up on kind of what we've been talking about for just experimenting with, we've been just talking about the basics of strategy development, right? This is also one of your, where's it at? This is one of your RSI breakouts, I believe. Next candle. Nope, this one right here broke 40. So this would be one of your RSI breakouts, breaking 40 to the downside. So a good example for anyone tracking that. All right. Edgar says, I missed out on last week. I was busy, but finally back. What's up, man? How the markets this morning? Doing good. And don't worry, Edgar, if you missed out, all of the recordings are up on YouTube of these first live stream sessions. So you can always go back. Now, make sure you don't miss out on next week's trading event. That's what you don't want to do. Don't miss out on that. Next 2 weeks trading event, I should say. Don't miss out on that. All right. So YouTube Trading View, thank you as always for joining. I'm going to boot you out. We're going to continue our conversation. David asked a good question about smart money concepts and order blocks. I'll get to that. On your way out, do me a favor, hit that like button. Leave any comments if you have any questions. I know some of you guys kind of joined a little late. I do read through the comments. Subscribe if you're new, and I'll see you guys tomorrow.